Okay, hi everyone, Daryl here. So I have another question emailed to me. So this person is actually asking, has the stock market bottomed? And I think that this question is rather interesting. So the basis of this question would actually be that this person actually saw that the stock market from its peak, let's say the Dow Jones Industrial Average, if we are referring to that index on the US stock market, it actually peaked at about 28,000 plus on the Dow Jones Industrial Average, and then it proceeded to drop. I think like it was the fastest drop in history. I think like what 10 days or something like that, and then it dropped to about like 18,000 something. So it lost like a third of its value in a very quick period of time. But then what proceeded to happen, right, was that the stock market actually recovered a great deal. So a lot of people are actually saying that, oh, I've missed out on the boat already, so I think that I should enter. But there are a few things that we should take note, and I've come up with a presentation. So I'm just gonna switch you guys over to my computer. Yeah, so it's quite cool actually. I have like three screens, so you can only see one. Yeah, but I'm gonna just show you guys a short little presentation and some tools which I use, and I'm not going to use any tool that you are not able to use. So that means that whatever information that I give you, you can actually find it on the internet as a free resource. So I subscribe to uh, uh, some uh, some programs whereby they help me out with like technical analysis and stuff, and I'm not going to use that. Okay, so I'm just going to use my trusty old Yahoo Finance, and I'm going to use some graphs from the IMF. Okay, so let's head over there. Okay, so this is my computer screen. Yeah, a lot of people say that I'm a bit weird because I need to have like three monitors, which is I look like a trader, full-time trader, but I'm not. Okay, so yeah, so this presentation is to answer the question, has the stock market bottomed? Okay, so where are we, and let's take a look. Okay, so although I like to reference the Dow Jones Industrial Average, but the true indication of the US economy, I feel, is more that gives a better snapshot would be the S&P 500. Okay, it encompasses a larger basket of stocks and companies, and I'll try to explain it in a later video what's the difference between S&P 500 and the Dow Jones Industrial Average. Yeah, but as a point to note, right, let's take a look at what has happened so far to the S&P 500 due to the COVID-19 crisis. Okay, so because of the coronavirus, the S&P actually went through a major correction. Okay, so its record high was actually on 19th of February 2020. I won't put in the figures so that you guys can just focus on the percentage and understand where the market is heading, and maybe you can have a deeper understanding of how market how the market will move. Okay, so what happened was that from 19 February 2020, it dropped by 34% to reach its low on 24th of March 2020. So in a period of like, oh sorry, I was like overestimating the drop. Yeah, but I think in a period of about 3 weeks, right, it dropped by 34%. So it lost about a third of its value in about 3 weeks, 3 weeks plus. Okay, so uh, and then it increased by about 25% by mid-April 2020. So a lot of people are worried because, oh, this only represents a drop of about 17% from its all-time high. Okay, this is just one slide. I'll tell everyone that okay, if you want to get into the market when it's 17% from its all-time high, right, from a drop of 17%, right, don't worry, actually the market moves in very weird ways. If you want a correction of about 10 odd percent, right, it happens every now and then. So you can just wait for the next correction if you think that this is just a normal healthy correction in a bull market. Okay, but is it a bull market now? Okay, so let's take a look at previous recessions. Okay, so the two nearest recessions which happened in recent times were the tech bubble, which was 2000 to 2002, and the global recession, which happened in 2007 to 2009. And this tech bubble, right, from the peak to the bottom, it dropped by 49%. So the S&P 500 actually lost almost half its value. And the time taken for the S&P 500 to lose almost half its value, or 49% of its value, was 929 days, which is 2.55 years. Okay, then next we have the global recession, okay, which to a lot of economists is actually the second worst recession since the Great Depression, which means that the Great Depression trumps everything, and then the global recession is the second worst after the Great Depression. So they are saying that since the Great Depression, there hasn't been a recession as deep and as severe as the global recession. Okay, so from the peak to bottom, right, of the global recession was a drop of 57% on the S&P 500. And the time taken for this peak to bottom drop was 517 days, which is 1.42 years. So you can see, if you go back and you take a look at this, which is not even a month, so it took less than a month for it to drop by 34%. Then it increased by 25%. Okay, but does it make sense? A lot of people are saying that this current coronavirus induced recession will be deeper than the global recession which happened in 2007 and 2009. Okay, so what gives? Okay, as with all asset prices, I've always mentioned to a lot of people, declines as well as inclines do not happen in a straight line. It takes time for valuations to fall. So if you are waiting for, let's say, a property market to correct, okay, it will not just overnight drop by 20% or 10% or 20%. It will not do that. Okay, it takes time for valuations to fall, and in time I'll show you. Okay, in a bear market, there is a downward trend, which means that the last low is lower than the previous low. Okay, so how do I get all these figures? Okay, where am I looking for? Okay, how do I get all this data? Okay, everything is available to you on Yahoo Finance. Go and search up Yahoo Finance, get in, take a look at the Dow Jones Industrial Average. This is actually my Yahoo Finance is live, okay, and this is what I'm looking at today. Okay, you can go in, you can see the Dow Jones Industrial Average. This is actually its chart. Okay, so if you see and you click on full screen, and you have to click on this max, okay, so it shows you the chart forever. Okay, so if you drew a straight line through, okay, generally if you drew through, right, it's a straight line trajectory up. But can you see that it goes up and down all the time, which means that you can see that even during the Great Recession, right, there are times where it went down, then it went up again. 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 But if you know, if you understand some basics about technical analysis, there's this thing called trend trading. So when we trade trends, right, this particular low, the next low is actually lower than the previous low. So the next low is lower than the previous low. The next low is lower than the previous low. So it's downtrending. No market goes straight down. Okay, no market actually goes down, 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 and then to zero. But we have a quite interesting scenario that's happening, and I will share it with you at the end of this video. Okay, so it is very rare, in fact it's impossible for the US stock market to go down to zero. I wouldn't, okay, of course I won't say it's impossible, nothing is impossible, but the chances are it will not go down to zero. Sometime or another, after a drop, right, even after this significant drop, there will be a rebound. Then there will be another drop, there will be a rebound. There will be a drop, there will be a rebound. There will be a drop, there will be a rebound, and there will be a drop. Until you get to the absolute low, then the market will start to pick up. Okay? So this is actually the Dow Jones Industrial Average, and you can actually take a look at it, and you can slowly plot, right, and you can see the figures around the side. You see this sidebar here? Yeah, when you navigate, right, you can see the Dow Jones Industrial Average going up and down. Okay, so you can plot and you can see, oh, this is actually what happened during the financial crisis. Use this to understand that asset prices don't go in a straight line. Not just stocks, not just equities, not just derivatives, not just property prices. Okay, everything, asset prices in general do not move in a straight line. It is a fallacy to say that property prices will go in a straight line all the way up in an upward trajectory. No, it is not true. Okay, so let's go back to the slide. Okay, then so now you've understood that from this chart, right, I mean, I could use this chart, but I use another software, but in essence, it was actually extracting that chart and then helping me to pluck out these figures. Okay, so understand that declines do not happen in a straight line. It takes time for valuations to fall. Okay, so I've actually explained to you what is a downward trend. The last low is lower than the next low. Sorry, the next low. Sorry, the next low is lower than the previous low. Okay, so it's a downward trend if the next low is lower than the previous low. Okay, and why does it take time for valuations to fall? Okay, if you have been following my investing 101 series, I actually explained about earnings per share and all that. So you understand that how investors value equities, they value share prices, and then you realize that earnings play a big part in determining how much an investor will pay as fair value for a particular company's shares. Okay, and if those earnings do not match up, then share prices should consequently fall. Okay, so it takes time for companies to report. In the United States of America, the US stock market, they have to report every quarter. So for the quarter that just passed, a lot of companies will come out and give their earnings in April. So they will start reporting in April, and then investors will actually listen, seek some guidance where it is going. So as numbers come out, a clearer picture of the economy will happen. Okay, and then from there they will say, oh, it's worse than we expected. So we lower our share prices, what we expect to pay. Then prices will fall. The stock market will start to correct. Then some good news will come out, or Donald Trump gives some ridiculous tweet, then the stock market will go up. Then after that, the reality sets in again. Then the decline will happen again. Okay, so let's take a look at the tech bubble. What happened? Okay, there was actually a decline of 28% first, then an increase of 19%. Then a decline of 28% again, then an increase of 20%. Then a decline of 31%, then an increase of 21%. Then a decline of 20%. And this is how the tech bubble of 2020 to 2022 reached the bottom of 49%. It didn't drop in a straight line. Okay? And next, we have the global recession, which happened just over a decade ago. Okay, this was because the banking crisis, and how it happened. The market dropped, the S&P dropped by 19%. It recovered 12%. Okay, then it dropped by 15%, and it recovered 7%. Then it proceeded to drop by 42% and recovered by 23%. And then it proceeded to drop by another 27%. And this is how the S&P 500 reached its bottom of negative 57% during the global recession of 2007 to 2009. Okay, so has the stock market bottomed? Okay, so past performance is not indicative of future performance, but from what we've learned from economic history, right? Human beings are always the same. Okay, all of us, no matter how intelligent we are, right? We tend to make the same mistakes. And a lot of people out there who are investing, they invest on emotions. So that's how they get suckered into saying that, oh, this is the worst that it can happen. Then we enter into the stock market because I missed the boat. Okay, so there's a high chance, right, based on past data that happened during the tech bubble and global recession, that many things are not priced in yet. Okay, and if you want to know global outlook, okay, just go to the IMF, the International Monetary Fund. Okay, and then I can show you the website. So this is the World Economic Outlook, and then you take a look at the chart here, right? Let me try to scroll it down. So you can actually insert, like, if you feel like it, right, then you just insert like Singapore. So it's quite cool. I mean, like, you get to see all this data. Yeah, I'm a data freak. Okay, so like I used to like statistics during my junior college and university days. Yeah, so this is actually Singapore, and then you can see our growth, wow, like 14.5%. But where is it going? So you can take a look. You take a look at Singapore itself. So during the uh, global recession, during the banking crisis of 2007 to '09, right? Our lowest point was actually GDP growth of 0.1%, which a lot of people already said that it's very bad. So we never had like negative growth since this tech bubble. So the last time that Singapore actually had a negative growth, right, was actually during the tech bubble. And during the global financial crisis, right, we still registered a positive growth of 0.1%. But if you take a look at 2020, right, these are projections. So uh, the World Economic Outlook, right, seems to say that Singapore is going to go through a really severe recession, and our GDP is going to contract by negative 3.5. And if you take a look at this, right, like I mean, I was born around here, so since I was born, right, there isn't a recession that had such negative outlook before. And I do think that in a lot of instances, right, this is not priced in yet, which means that this number could go worse. Okay, so why is it that we are in most probably the worst recession in many of our lives, then yet the stock market should not be in a downward trend like it has happened before? So all economic figures and statistics and history point to the stock market performing even worse than the past two recessions. And yet people are coming out there and telling people saying that this is already the bottom. Okay, my point to everyone will be that I'm putting my foot out there to say that no, I have a very high uh, I think there's a very high percentage that the stock market has not bottomed. Okay, and what else did you can look at the IMF World Economic Outlook. It actually projected that growth in advanced economies is projected to come in at negative 6.1, which is horrendous. Okay, and it's estimated that income per capita is expected to shrink in 170 countries. And that means that for us in Singapore as well, our income per capita is expected to shrink, which means that our incomes are going to fall. Okay, and yeah, so take all this information in and look at how the stock market has performed in past recessions, during the tech bubble, during the global recession. Okay, and then think carefully, has the stock market bottomed? I've given you data, I've given you tools to go and take a look, try to understand, then rationalize it in your head and think whether you should enter the stock market at this juncture. Okay, another point today is quite interesting because oil prices are in a free fall. Okay, so at the point in time where I posted this thing up, it's quite shocking because someone actually messaged me. Then I saw that, yeah, so now oil prices right down here is 10 cents, right? So now the thing is that these are actually contracts. So how futures contracts work, right, is that I can't sell you a barrel of oil. I can sell you a futures contract, which means that this contract is promising you that I will deliver a barrel of oil to you at a certain date. So that contract is worth a certain amount of money. But the point now is that the global demand for oil is very, very low, at an all-time low, because factories are not operational. No one is actually using oil. Very few planes are flying. Other than carrying cargo, right, there are not many passengers that are traveling to and fro between countries. And at this point now, if you can see, right, so oil is at negative $28. Is it negative $28? Okay, and what that means, right, like why is it that some commodity called oil can be negative. Okay, the main reason I would think, if you're an oil trader or you're in the oil industry, correct me if I'm wrong, it takes time to deploy an oil rig. It takes time to deploy the machinery. So the main reason why you can't just not produce oil, right, is because if you stop it like a machine, right, you stop it, there may be damage to the machine. It may cost you money to restart the production again. And so now what's happening is that uh, since it will cost them some money to restart the machine if they turn off all that machinery, right, what they're doing is that they're telling people, you come and take this barrel of oil from me, I give you money. Okay, so now you go to them, you take the barrel of oil, okay, they give you money, okay, but you got to go and find a place to store your oil. Okay, that is what's happening now. Okay, so you think about it and you understand how ridiculous this situation is, and then you think about where we are as a global economy, and then you try to fathom what's happening, and then you make better investment decisions. Okay, so that's my presentation on the stock market. So I think that we have not hit the lows yet. This is my take on the market. So if a lot of you guys are out there and then you say that, oh, maybe I lost a chance to invest in the stock market at its all-time low, I sincerely don't think so. I think that there is still some pain to go. This is going to be a really ridiculous time, because never in my life would I have expected to see that crude oil prices will be negative, which means that people will be paying me to take oil off their hands. Okay, so um, this is ridiculous, and I've never seen it in my life before. I mean, I'm not particularly old. I'm like just about 4 decades old, and I spend a large portion of my time looking at reports from Bloomberg, watching CNBC back during the financial crisis, which means that 2007 to 2009. I had this idea that I had to uh, I had to internalize what happened, and I had to remember what happened, so that it would better prepare me mentally for what is going to happen during the next financial crisis. And from there, I always, if you see my videos, if you read my reviews, if you read anything which I wrote about investment, I always say that nothing goes up or down in a straight line. Okay, so I I have this thing that my point to everyone is that I want to show you guys that even though it's downtrending, right, there are instances where it goes up, but this is just a relief rally. Relief rally means that cannot drop all the way, right? You're not so depressing. So sometimes once in a while, people cover their shorts. Some people say, oh, I missed the bottom already, so I quickly go and rush in. This is the main reason why equity prices start to increase. The same thing for property prices as well. All these are all assets, okay? And the truth of the matter is that we are not only in a medical crisis, but because of this coronavirus that's happening throughout the world, because of COVID-19, a lot of countries, they are handing out money to its citizens. They are having fiscal stimulus. They have very loose monetary policies, and all these will come at a cost. So for Singapore, right, when the government uh, has all these support packages, we are paying with money which we have accumulated over the many decades. So our previous generation, right, they are very good, so they save a lot of money. Then now when the country needs money to tide through this difficult time, right, the government can go inside our reserve and then pull out this amount of money and then fund these policies. So on that note, right, I am really fortunate to be living in Singapore, because now what is happening is that our previous generation is paying for us to receive all this money to help us during this financial crisis. But in many countries around the world, right, that's not the case. Okay, so there are a lot of governments, right, whereby when they go and when they want to come out with a stimulus package, right, what they do is that they go out to the public and then they borrow money. So they either they get it from the public or they get it from institutions. So they go out say, oh, I want to issue this amount of debt. So the governments themselves, right, they are all issuing debt, a lot of them. And one thing is that so a lot of countries owe the richer countries money. So a lot of countries owe China money. Okay, and then one day something will give, and then you will see a debt crisis. So there are many instances whereby debt crises have occurred already. So there was a debt crisis in I think 1970s and 1980s around there. So the South American countries, right, they borrowed heavily, but now the debt crisis is global, which means that a lot of countries, right, they are just borrowing money. Okay, so a debt, right, is not always a good thing. So a lot of us, we might have proceeded to purchase like 2, 3, 4 properties, and we never pay off any one of them. Why is it so? So a lot of people, they come to me, right, they say I want to take on new debt. What's the purpose? I want to they never have this impression that saying that I buy this property, one day I want to fully pay off my mortgage and then live debt free. They never say that. They say that I want to buy this property, then when I buy this property already, right, in maybe 6 to 7 years, I can sell. Then I sell already, I make money. So now I don't mind, I take on debt. I take on debt now so that 7, 8 years time, right, I make money. Or property sure make money, go up in a straight line. Okay, it never happens that way. There are people who lose money in property investment, they never tell you only. Okay, so they are quiet. Okay, I myself, right, when I show you the counters, I'll go and dig up all my previous share purchases, and then I'll just try to share with everyone. But and the basis of why I invest in certain things. So I can also show you the ones which I profited from, but I also can show you some that the companies went bankrupt. Okay, so if I'm not wrong, I think I owned General Motors when they got bankrupt. That was like a really weird time. Like, huh? You mean General Motors can go bankrupt? Yeah, but that was like really, really amazing. So back in '07, '08 and '09, right, it was a really interesting time for me because I studied all these during my university days, and I have a deep interest in economics. So even till today, right, I do read like things out from the IMF, and I do try to use what I learned during my junior college days and my university days, then to try to put it into perspective. But the thing about it is that what you read and what you see in college and in tertiary education, right, is distinctively different from what is happening in the real life. But on hindsight, we can use those economic principles to try to understand. But it's more about sometimes it's also about looking at financial statements. Then you see, oh, this is happening again. The same thing is happening again, and now it's worse. So if you ask me, right, based on what I'm seeing, right, I do think that this recession is supposed to be worse. Okay, and but that being said, I do hope that there's a faster resolution to this coronavirus crisis, and I do hope that everyone stays healthy, and I really do sincerely hope that life can go back as per normal. And but I don't think it can for a significant period of time, but I hope it does. And stay safe, everyone, and I will see you at the next video.